right, what's up? Cowboy here, 8:30 AM EST. It's Friday, and it's actually kind of a quiet Friday as the charts go pretty unremarkable. We do have some data coming out, in about an hour and a half, I believe. We're going to check the data calendar. We're going to verify that. We'll take a look at our standards, take a look at Bitcoin, we'll take a look at some metals, whatever it is that people want to see. Go ahead and speak up in the comments if you do have things that you want to see, and we can jump in there and do that. All right, so let's go ahead and share the screen. Okay, here we go. Okay, so here's the data for today. Let me expand this screen a bit here, make it a little easier for you all to see. We had some Canadian data come out there, so not as common for me to trade Canada, but I have been testing one of my algos here, and the Canadian dollar actually does test well for one of the versions, so I might start looking at that. But for now, that's not that relevant to my trading. But their unemployment data came out today, and that's going to definitely affect the Canadian dollar. The USD preliminary University of Michigan consumer sentiment comes out, and that's actually a pretty notable thing. I know this kind of sounds like boring and dry, but that will affect price, and that comes out in an hour and a half. So any trades that I would be in before then, I might tighten up or simply exit. But I can tell you that volatility has fallen off of a cliff. There's not a whole lot going on in the markets right now. So it's just, quiet, trying to trade the chop can end up being a bit painful, can definitely have some issues. However, next week will be exciting. Wednesday is going to be CPI. So CPI is kind of the precursor to the FOMC. FOMC, the Federal Open Market Committee. What's going on with that? That's when the Federal Reserve talks about the interest rate and how they're going to set it. And the big question is, are they going to cut? Are they going to hike? Are they going to keep it how it is? Now, this CPI leads up to that because the reason that the Federal Reserve has been moving rates around, at least recently, has been to do with controlling and taming inflation. We've been printing money for many, many years now, printing money out of thin air. So it's not really backed by anything. And therefore, when you inject it into the economy, it just causes inflation, right, in the end. And the problem with that is, of course, poor people lose money and rich people make money. I mean, let's just put it this way. The rich people run the world. And if they have a way to continue to make money, they will. And so they probably don't want to see inflation go away. And as long as the rates are low, as long as the FOMC interest rates are low, then they will continue to make money. But if they're too low, then the rest of us cattle get upset because our savings are eroded and prices go up. So they got to walk that balance, right? They got to walk the balance between not letting inflation go too high, but also not allowing for any deflationary events. And a deflationary event would manifest in like the stock market crashing, right? Well, CPI is inflation, consumer price index, and there are a few different measures of it. And so basically, if this comes up too high, right, if the core inflation, we got month over month, year over year, if those numbers are higher than expected, then there is a decent chance we will not see any kind of cuts, right? Finding Durham wants to see copper, we can see that. But if this comes out low, if the CPI comes out a little bit lower, then, of course, the market itself would appreciate some interest rate cuts. However, I don't know that the market needs to see it. The market continues to go up and up. However, a lot of people are, actually, I shouldn't say a lot of people, a few people are theorizing that has to do with some other machinations, some other things that are being done to keep markets from falling in an unnatural fashion. So, if you take a look at what's happening with the markets, you can see, and this is with the SP 500. I have been I've been predicting a continuation upward, and I did think price would actually dip a little bit lower than it did. This move down, I thought would go down to maybe like just a little bit lower. You can see the arrow down. I thought we'd see kind of this, snaking up, but it appears that money just keeps flowing into the markets and it's heading up sooner than even I thought. And I was probably considered a bull. So in this case, we'll have Expound the Profound on, and Frank really knows the market plumbing. He's supposed to be on yesterday, but we didn't. And I'm talking about Rogue, by the way. He was supposed to be on the Rogue show yesterday with V the Gorilla and myself, except that V did not have internet, so we were unable to interview him properly. But I would say give him a follow over on Twitter. He just really knows market plumbing, and he talks about how they crush the VIX using other currencies, right? And essentially, I don't want to ruin it. I don't want to try to over-explain it, but they're just holding the market up unnaturally, is what it appears that they're doing. A lot of it has to do with keeping oil under control. Oil is essentially the dollar, the petrodollar. So the more you control oil, the more you control the dollar, the more you can control inflation, and the more you control the world. So again, Wednesday CPI data is going to be a little telling, right? And again, if the inflation or CPI comes out high or hot, then rates may stay higher for longer or even possibly get hiked up. And the thing we have to bear in mind is that it's an election year. Okay, so during election years, the incumbent, aka the people who tell Biden what to do, they want the stock market to continue up, and continue up it does. We're really obviously seeing that right here in the charts. So if the inflation is high, that is going to continue, and if there are any hikes in the rate, there is the possibility that the market drops. And conversely, this is a little bit counterintuitive. If there are cuts in the interest rate, oftentimes the market can drop as well. People don't understand that. People think, oh, well, they're going to cut the interest rate. Money's going to be cheaper. More money will flow into markets, and markets will go up. And that's true maybe in the long run. But usually if there are interest rate cuts and there are more than one in succession, the markets tend to fall a little bit. And there are some theories about that, but we don't really have time to go into that. So changing course in any way could cause at least a temporary fall in things. So CPI is going to be interesting because the CPI is going to give us some insight into what may happen at the FOMC, which I believe is either the week after or the week after that. All right, so let's look at copper for Finding Durham. Okay, so let me see. We're on a daily here. I mean, obviously bullish. You're in a very clear uptrend, and it looks like you're in a high time frame uptrend. So let's roll back and look at the monthly. I can tell you, algos are just bullish all around. So there's nothing about this chart that says anything besides bullish. Now, we did have some highs in 2021, and that seems to just, a lot of things went up in 2021. All the money being pumped into the economy, that really was a short-term look at what pumping money into an economy can do. It was in 2020, you had the COVID crash, quote unquote, and then of course a lot of money just got crammed into the economy. Markets went up, copper went along with that, right? So there's just another input that went up. And if we take a look at just the way the chart is here, a new high was created in 2021, and that high was at $5.03. Now, algo-wise, it's all bullish. However, it's getting to a point where it's bullish up against resistance. We might be entering what a lot of people think is a commodity supercycle, where when you hit a super cycle, right, when you get a new paradigm in the way that something trades or in the way that something is valued, then the prior data can be in a certain way not quite as relevant. So even though we're looking at an all-time high, and even though price is bullish into resistance, it may simply be that we're just going to see a whole new world of commodities. There's been a talk of, like I said, a commodity super cycle. So I would venture to actually, let me see here. I'm just looking at some past price action here. Look, if price can get above 503, and if the market continues as it does, right? If we don't see any kind of deflationary event, if we don't see very quick hard cuts, because that would be temporary deflationary, or if we don't see super heavy hikes of the interest rate, then I think copper is going to kind of slow down but continue up. So I'll zoom in on this, make it easier for you to see. But I expect something like this right now, right? So I expect a continuous movement upward, but it might slow down a bit. So it's been really, really pumping up the last like 5-6 weeks, going back to early April. It's just really, really, let me see. It went from $4.04 up to $4.60, which is 15%. And that's big. I mean, that's huge. especially if you're playing in the paper market with leverage. That's really huge. So I do think it continues up. I think it goes more slowly, and I think you have to watch out for that all-time high at $5, right? And that's also a psychological number. At $5, this is where price can turn around and start to go against the upward movement, and that's fine. What we want in trading is volatility. In reality, we almost, as traders, don't care up or down. We just want movement. And in the Forex markets of the last day or two, there hasn't been a whole lot of that. It's just been, actually 2 days ago was great. Yesterday was really slow. Today, again, we have news coming out in about 50 minutes. No, that's not true. It's an hour and 10 minutes. So, man, my brain is not working. It's an hour and 20, right? Yeah. So at 10 AM EST, we do have that data coming out. So we might see a little action in the Forex markets and elsewhere. But yeah, that's copper on the kind of on the, let me see, like say the quarter three look on copper and into early quarter four. So finding Durham, I hope that satisfies your question. If you have any more specific questions, feel free to bring it. We will be back on Monday, we being me, and the gorilla is usually here. He's I know the gorilla did not have internet yesterday, so he might be running into that issue. He had some work being done on his house, so we might not see him today. But like I said, either of us can talk about it. So bring your questions on Monday, and that goes for anybody watching. Okay. So just because you're not in Algo Factory doesn't mean that we cannot help you take a look at what might be going on in the market. So, what we do at Algo Factory, if you want to really, know it, go to zap that QR code on the top right-hand corner. That'll take you to our website, and we help people build a trading plan. We help you build a trading method or mechanism, you could say that. And this is something you can wash, rinse, and repeat. And you can have an idea of how likely it is that you'll win. And as long as you are doing this properly, testing it, and doing the work, then you have an extremely high probability of creating a method by which you can extract money from the market, right? Some people design a method where they want to extract money a few times a week. Some people are wanting to do it maybe once or twice a day. And that all depends on how you want to design it. It is completely up to you how you want to run this. So come on over to Algo Factory. And as V the Gorilla would say if he were here, join us or die.
Join us or die.